Good morning, money magnets and master traders. I have to say, yesterday was a pretty nice trading day. Very volatile movements. It was some up and down movements, of course, but it was volatile. It was very tradable. Broke down my 556.4 level. First setup of the day. It was really fast though, so I don't know if anybody caught this one, but it dropped, but very similar to the previous trading day over here that we had over here. Very similar to that when we broke down and then boom, false breakdown setup. Same thing happened yesterday morning when we recaptured my 555 level and 556.4 levels, popped to the upside before we had a false breakout setup. Cleared my 562 level, cleared my 560.8 level, but then we had a false breakout where we dropped back down, hit 556.4ish, recaptured my 559 level. It was awesome, in my opinion. Very, very tradable. We use the 15-minute chart. We get false breakdown setup. You look for calls. Breakout resistance, you look for calls. We break down support or false breakout setups. You look for puts. Play it level to level with runners. Yesterday, in my opinion, was pretty tradable. However, we did get a bounce, a higher close from the previous day. Tuesday's close was higher than Monday's close. Are we bullish, Uncle Charters? Well, let's get this out the way. Right now, your Uncle Charters is bearish. Okay, Uncle is bearish for a couple of reasons, maybe a few. First and foremost, the breakdown of the bear flag is still intact. Okay, it was a very nice drop. Possibly a lot of people caught FOMO, didn't get good positioning. Market makers decide to squeeze them out, give us a nice little relief bounce for the last couple of trading days. However, the breakdown of the bear flag is still intact. And this bounce led to a back test of the 5 daily moving average. Now, the 5 daily moving average, I really love it, but it's a short term moving average. And lots of time when the market is bearish, they will spend more time below the 5 daily moving average. But when it gets too overextended, when the price gets a little too far away, like it did last Friday, and when we gapped down on Monday, it got pretty far. So yesterday allowed the price to correct itself a little bit and back test and go back and test that 5 daily moving average as a resistance. Okay, so now that that's been corrected yesterday, the question is, what is next? Can we continue to be bearish? Can we get that follow through after the bear flag breakdown? Possibly, because today is the day that our president, Donald Trump, is going to roll out some tariffs. So we'll see how the market responds to that, okay? He rolls out the tariffs. Maybe he's going to get some people nervous. Maybe they'll sell some in their position, help push the market down. And if it does, right now, the chart says it's set up for that. With the breakdown of the bear flag and the back test of the 5 daily moving average, it's set up for bears to show some follow through, especially with the tariffs can possibly serving as a catalyst. Okay? And if it does, once again, I have resistance at 560.8 and then support at 559. Well, it's below 559, which make 556.4. That's a fib level. Next support. That's my 1.5 Fibonacci level. I'm telling y'all, if it fails, that's the bearish follow through you want to see. 556.4, 555 fail. Bearish follow through. We are heading down lower. Okay, 553.5, 552, 549.6, 548. I think we could drop even lower, all the way down to 543.3-ish. That's the fib level that I got. All right? That's the bear case scenario. With help with news from the tariffs, break down some support levels, stay below that 5 daily moving average. That's the bear case scenario. That's when you want to look to short. When we break down that 556.4 and 555 level, should give us a nice, nasty drop to the downside. Now, if market makers decide to flip the script and push the price higher, We have to be open to that. Remember, our main goal is a green P&L. Okay, that we can make money to the upside, we can make money to the downside. We should not be married to the market just moving in a certain direction. We should be open to any case scenario and be able to follow the price action and capitalize on it and make money. So if it's bullish today, 559 and 560.8 must clear, but the critical level I have is at 563. All right, that's a fib level, and getting above that fib level would clear yet around yesterday's high and get us above the 5 daily moving average, which is the first step for the price action to turn bullish, is to recapture some lost levels and get above that 5 daily moving average. Okay, so we clear 559, 560.8, and 563 today. That's a bullish sign with 565, 566.5, 568, and 570 plus in play. Now 570 is also a fib level, but recapturing that level would also get SPY back above inside this bear flag. Okay, it will be a recapture of this trend line. That would be bullish as well. All right, clear 559, 560.8, 563. That would be bullish. Okay, that will put 566.5, 570 plus in play. Okay, that's the bull case scenario. Now it's on us, the individual trader, to use the levels wisely, okay, and follow the price action. Now here's triple Q, still overall bearish as well. We did get a nice little relief bounce here. It was almost an oversold territory, very overextended, far from the 5 daily moving average. Yeah, at one point it was overextended on the lower Bollinger Band as well, but corrected itself a little bit. Didn't quite hit the 5 daily moving average though. Okay, so right now we're gapping down from where we closed yesterday. It's around 469ish. I have support at 469. I mentioned in yesterday's video that 469 was the equilibrium level for triple Q. Above it is bullish, below it is bearish. Managed to get above it, but here we are gapping back down. So if it's lost as support, yesterday was most likely a bull trap or something. But if we lose 469, that would be bearish, guys. 467.5, 466, 464 or lower would be incoming. Below 469 is bearish. Now if we can stay above 469 and bounce, trusted only at 471, 473 can recapture. The 5 daily moving average is sloping down around the 475 level. So recapturing that level would be a good win for the bulls. And put 478.8 and 480 plus back in play. Tesla, I think Tesla, yeah, it's got a little bounce yesterday. I mean, it looks like it's gapped up. It gapped down to this one little candle. Well, it's not a little candle, it's a decent sized candle. Then gap up. Would that count as an island reversal? I'd have to look into that when it's just one candle. Either way, 260 is a fib level that I got. It's the equilibrium level. Below it is bearish. But if Tesla could stay above it, it would be bullish. Okay, right now it's around 264. I have next resistant at 265, 267, and 270. All right, those levels clear. More upside as possible. If you want to get bearish on Tesla, 262 and 260 must fail as support. If they do, look to short. We could be dropping a lot all the way back down to 250 or lower, okay? Here is NVDA, not quite bullish just yet, guys. It did not clear the 5 daily moving average, and we also have an inside candle setup with the mother candle's range 111 down to 103.6. Interesting. But right now it's around 109, is around my 109 support. Below it, if it fails, 107 in the fib level, 105.8 is in play. I'm overall bearish below 111. So if we can break down those support levels, that would definitely be bearish follow through. If you want to get bullish, 111 and 113 both must clear. Above 111 would clear the mother candle's high and recapture the 5 daily moving average. And then above 113 would clear a fib level. So those two levels cleared, then we can get bullish on NVDA. Here is coin. It's still looking bearish to me. It's a little bit overextended from the 5 daily moving average. So we'll see if the 5 can slope down a little lower, or maybe coin will meet it up there and head up a little higher. But if it does, next resistance at 174 and actually 175 and 176.4. If those levels clear, 180 plus is possible. If coin fails to clear 174, I do have a fib level support at 172.3. That level fails, guys. 171, 169, and 167 or lower incoming. And last but not least, here is the VIX. Managed to pull back these last, well, not really a pullback if you think about it. Because, well, Friday's close was around 21.6. Monday's close was 22.2. Yesterday's close was a little bit lower, 21.7. But right now it's trying to gap up here and push higher. I tell you this, 22.5 is the fib level that I'm watching. If VIX can stay above 22.5, I'd be bullish on VIX. Okay, and I'd be happy because that means volatility. But below 22.5, well, there is a bit of support around the 21.6-ish area. And then I have a fib level at 20.8 and 19.5. Okay, so below 22.5, a lower pullback is possible. But above 22.5, then we got a bounce possible. Okay, look to react, guys. Thank you guys so much. Be careful today. We got them tariff talks. So manage those risks. Remember what I said about managing risk yesterday. You know, just have a good perspective. See it as a good thing. You know, we all got to do it. It's very difficult, you know, but it's possible. All right. Thank you, guys. Peace.